Thank you for joining us. This is our second live session. And my name is Carol. I am a tax practitioner. I'm a professional accountant, a corporate governance specialist based here in Johannesburg, South Africa. I am dealing with tax and accounting matters, and we will be live every Thursday at 10 a.m. It'll be a 30-minute session for now because people are busy, they're at work, from 10 a.m. to 10:30 a.m. So please do join us. We will also be having our evening sessions. We'll be dealing with the same topics. So it's once a week, morning session, evening session. The evening session is for those who are unavailable in the morning. So we will be live at 7 o'clock from 7 a.m. to 7:30. Welcome to those of you who are showing us that you are here. Welcome to this morning session. So I'd like to welcome those who are still to come. I'm sure they're still joining. I don't want to start until most people are connected because I will have to go back again. I see some people are saying they can't see the live. Not sure how to help them, but it is there. It is there. And unfortunately, I can't connect now right now to be able to assist you. You may have to join later. Someone is saying they can't connect, but I think one or two of you have already connected. The one person who has connected, please send me a message on here. How easy was it for you? Were you able to connect easily? Please respond here so that I know if there's a problem. If it's appearing, is it appearing? If you go on YouTube, please let me know. Are you able to connect? Are people struggling to connect? Okay, let's see if they can manage to connect. I'll just give it a few more minutes and then we will start. I'm sure they'll find their way. Everybody knows YouTube now, TikTok. Those are all the common platforms that people are using. So it's just a case of finding the right place to connect. I will just give everybody 2-3 minutes. Maybe let's start because I see there's at least 3 people connected now. Okay, we're going to start. So I had given you a little summary of the topics that we will be discussing today. And we said we're going to discuss profits, we're going to discuss budgets, and then we're going to discuss salaries. Now, remember, I am crossing over various networks. I'm speaking to employers, business owners, what we call SMMEs. I'm also talking to people that work in accounting roles in companies. I'm also working to just, people out there who need knowledge, who want to know what's going on in the tax and accounting world. And as I mentioned in the beginning, we are dealing with tax and accounting issues on this platform. Please do join us. I will repeat at the end of the session our times once again. But as I said, we are crossing quite a broad view. The audience is not just one set. So I will try and satisfy most people by being both basic and also trying to go into slightly technical areas, but it won't be too technical. I see more people have managed to find us and they're joining. Welcome if you're just joining us. If you were with us last week, you will know my name is Carol and that we are on YouTube live every week now on Thursdays, 10 a.m. to 10:30. We are doing business coaching. We also have the same session in the evening, 7 p.m. to 7:30 for those who can't make the morning. but it would be great if you join our morning session. It will be engaging, it'll get more interesting and more exciting. As I said earlier, we did mention the 3 topics we are discussing today. So I'm going to start with the first one, which everybody wants to know about. If you're a business owner, you're in this to make a profit. If you're not a business owner and you're working in a company, you want the company you're working for to make profits, right? I mean, for you to get an increase, for you to get a salary every month on time, the business needs to make a profit. So we all agree that nobody goes into business to make a loss. Everybody goes into business because they need to make a profit, they need to survive. Of course, some people go into it for the wrong reasons. Maybe they're unhappy at work, or they just feel like, hey, I can do this on my own. Whether it's what we call a push or a pull factor that has got you into business, you're in it to make money. So what are we talking about here? Profit. And what is a profit? I'll explain. When you are selling your product or providing a service, for instance, you are billing someone for providing a service, say you're a law firm or you're an accounting firm, you bill someone for the service. If you're selling goods, you're manufacturing or just basically trading, that is your gross sales, that is your revenue. Okay, that's what we're talking about when we say sales or revenue. That is the figure that you are making or the amounts that are coming into your bank account as you are trading. That is not your profit. You will have expenses. If you are buying products for resale, that is what we call cost of sales. Or if you are manufacturing products for resale, say you're buying raw materials, for instance, you're in a plastics manufacturing company, then you have what we call your cost of sales. You're buying your raw material, you're buying your plastic, you're then manufacturing it and making it ready for sale. That is your initial trading cost, and that is your cost of sale. So when you now deduct your cost of buying those materials, your cost of paying for certain key elements, you then have what we call your gross profit. Before we get into your actual costs and overheads, you will then have, as a business, certain overheads like your telephone expenses, your rentals, your salaries. Those are all what we call overheads. And of course, once you deduct every single cost of the business, you then know whether you've made a profit or a loss. This should be done monthly. You need to be able to tell on a monthly basis whether you're making a profit or whether you're making a loss. And it's important to be able to tell in the periods where you're making losses why you're making a loss. So this is where we now prepare what we call monthly management accounts. Not many businesses do that, to be honest. Most people just trade, and as long as there's money in the bank, they're happy. But guess what? You're not really going to go very far if you don't have reports that show you whether you're making a profit or not. So if you're working for a company, encourage your bosses to say, let's do reports. Let's see whether we're making money or not. Let's see which months were more profitable. Let's see the seasons. Like for instance, if you're an ice making company, in the winter months, you'll probably make a loss, because you're still paying out expenses, you're still paying rent, you're still paying electricity, but you don't have much money coming in. Nobody's buying ice, it's too cold. And then you have someone who maybe in the winter, maybe they're making jackets or they're doing coffee, they would make more money. So profitability is your ability to make a profit, your ability to make more money than you are spending, if you put it in a simple manner. So that's the first thing that we wanted to define today, to make sure that everybody knows when we say profit, what are we talking about? The question is though, how do I as a business owner make those profits? Or how does my company make those profits so that they can pay me a salary on time, pay me profits? Well, there are several ways, but I'm just going to mention a few of the obvious ones. Of course, you have to keep selling. Your sales have to be continuous and they have to be ongoing. But there's no point if you are doing sales and your clients are not paying you on time, or if they're not paying you at all. What that will mean is you'll have bad debts, and that's what we call a bad debt, where you have made a sale, but you haven't been paid. So sales have a lot to do with revenue, with cash flow, with money coming in. And obviously, as a business, as long as the money is turning over, your bank account on a daily basis is changing, then you know you're doing something right. But of course, your costs need to be kept at a minimum. You need to make sure that you're not spending more than you're making. Some people like to keep stock. Okay, so if you're running a business, you need to keep stock. You can't just buy enough to sell on that day. You need to manufacture. You need to, some manufacturing processes actually take time. So you need to keep stock. You also need to buy in bulk so that you can get the best prices. Now, this is where the problem comes, because you need to buy bulk, but you're not necessarily selling bulk. You might be selling a bottle at a time. So you need to make sure that your cash reserves can cater for the stock, whilst at the same time, you're able to do the sales that relate to what you've previously bought. Now, in your profit statement or in your income and expenditure statement, you then need to make sure that you are outlining your stock. Because if you do not show that you have stock, you will seem to be making losses. Because remember, we want to be able to say the sales for the period, for instance, of May, match them to the expenses for May. You don't want to be able to say your sales for May are being matched with expenses or stock that goes over several months. If you do not get that concept right, you will be showing losses when in actual fact you're not making those losses. So this is where now we need to be able to ascertain our stock. We need to be able to count our stock. If you don't know how much stock you're sitting with in the warehouse, how are you going to be able to account for it? Now, not everybody carries stock. So this doesn't apply to you if you're providing a service or if you're just buying for resale and not keeping stock. I have clients who very often are just exporting goods and they're just selling goods. Maybe they're sending them across the border. Okay. In that instance, then you don't keep stock. You are buying what we call just in time to sell. So that is our first topic today. We talked about profit, and I just gave you a brief outline how to make a profit. We said we want to increase sales. Another thing, we need to reduce our costs. Another thing we need to do is market, obviously. You need to get your product out there for your sales to be recognized, to be seen, for people to buy your product. These days, people are using social media. They're on Facebook, they're on YouTube, they're on TikTok. Bring those sales out, advertise. And you need to have good product as well. Remember, the best way to increase or to get customers is by word of mouth. If I buy a product and it's in bad repute, I'm not going to buy it again tomorrow. I'm not going to tell the next person to buy because, maybe the quality wasn't so great. So you need to look at things like your product itself, your quality. You need to look at how it is that you relate to your clients. If you relate well with your clients and you make sure that what we call client service, they're happy, they want to come back. They walk in through the door, they greeted with a smile, they get their goods on time. If there's a complaint, they're attended to. Customer satisfaction, customer service, that goes a long way in terms of just increasing your sales and keeping your clients happy. So there's also a manner of things that you can do to make more profits. You need to know, how are your prices? Are your prices good enough when you compare with your competitors? Because you must know, what are your competitors charging? If you're just selling blindly, guess what? You might be overpricing, or you might be making a loss. Maybe you can charge more. So you need to know what your competitors are charging so that you keep your prices within a decent price range. That is one way in which you can make sure you're making a profit, because obviously you're selling as you should. Another thing you can do is what we call your internal environment. So you're making sure that within the company, there's morale. People are happy, people are producing, there's joy around. You're more likely to get a product that is good, to get productivity, to push things out, especially if you're in an area where you are driven by, deadlines. You have to produce by a certain time. If the morale is happy within the firm, you'll find that everybody works together and there's like a group cohesion. There's a group, the spirit is right. People are working, they're happy, they're paid well, the staff is working well, and therefore you will produce more. Okay, so I think as far as profits are concerned, I've taken 15 minutes. That's all I'm going to say on profits. We also needed to talk about salaries. That's one of the things we said we're going to discuss today. So every business has employees. Some of you are saying, oh, but maybe it's just the director himself working. Yes, he's an employee. He needs to get a salary. He needs to be paid. So therefore, a salary should be drawn for him. A lot of people are not doing this properly. Business owners out there, small business owners, please pay yourself a salary. Try and predict your expenses and keep the salary constant. Remember, if you're paying a salary, you register as an employer with SARS, you do pay slips, you deduct the pay as you earn and the UIF. A lot of clients come to me and they say, oh no, but I'm paying all this to SARS. When do I get something back? I should be getting a refund, a rebate. Unfortunately, it's all over the world. People who are working, they pay their taxes. It's not with the expectation that you'll get a refund or the expectation that you'll get a rebate. It's simply a requirement for all taxpayers or all people that are living in any republic. Now, you would only get refunds, let me make this clear, when you're submitting your personal tax return at the end of the year. It's possible that you get a refund, but it's not every time. You may get a refund because you have, let's say, medical aid credits or retirement annuity credits, but it's not everybody who will get a refund. It is, however, everybody that has to pay their taxes because they're earning a salary. Also, please remember, it's not every employee that gets taxed. It's only if you are above the taxable income bracket. So there are tax brackets, and those are a bit complicated. I won't go into them in this session. It's not every person that gets a deduction for pay as you earn. But as long as you are not on commission, you should be getting a UIF deduction. UIF, Unemployment Insurance Fund, and that is with the Department of Labor. So for salaries, you need to make sure that you are doing the pay slips, you are doing the deductions and paying over to SARS, which a lot of people struggle to do. Remember, if you pay late, you will be charged penalties. And of course, this all comes full circle because at the end of the year, the tax year, when the tax season opens, that employee will need to file their tax return to SARS. And I think I talked a little bit about this in my earlier session. But basically for salaries, you need to find out where your salaries fit. As an employer and as an employee, is there a tax deductibility or is it below the threshold? Remember, there's also other certain rebates. If you're over 65 or if you're over 60, your taxes are a little bit relaxed. But for most of us, the tax is exactly as we see it. So as far as salaries are concerned, please do, as a director, pay yourself a salary. Your staff, let them get their salaries. Now, you just need to establish and say, this is our pay date. Maybe it's the 25th, maybe it's the 30th or the 31st. That is your pay date. You then need to make sure that your pay slips are reflecting the right date. You need to make sure if Department of Labor comes in and they audit you or they inspect you, you've got your employment contracts, you've got your pay slips, your record of pay slips, you've got your payments going over to SARS and to the Department of Labor. I think as far as salaries are concerned, there is a lot more to speak on the subject, but we will get into that at a later stage. Just remember as well that if you're paying commissions, for those of you who are working in environments where there's commission, for instance, if you're selling houses, you're selling cars, maybe you're in a nail bar, a hair salon, and it's just commission, remember there's no UIF. Therefore, if your commission is, for instance, below 8,000, then that means there's no deduction whatsoever because there's no pay as you earn, you're below the threshold, and there's no UIF, you're earning a commission. So just remember those little things and make sure that if there is SDL, now what is SDL? Now SDL is a deduction that only the employer makes. The employee does not have to contribute. It's different from UIF. UIF has a 1% contribution from the employer and a 1% contribution from the employee. There is a limit though. So only up to 177 Rand. Once the deduction of 1% exceeds that, you don't keep actually increasing it. You stick to the 177.12 per month. SDL is different. It means if you are registered as an employer and you are doing SDL contribution, Standard Development Levy, you are deducting, you're paying it over, but you're not deducting from your employees. You're paying over that 1%. Remember also, there's no limit. So if somebody is earning, for instance, 100,000, that SDL of 1% has to be paid over 2 SARS. No cap, no limit. So remember that. And you do not get it from your staff. You do not deduct it from your staff. It's just, as an employer, your own contribution. Okay, so we're on to our last topic now. We said we're going to talk about budgets. What are budgets? Well, in your personal capacity, you should be doing budget. You should know what your salary is if you're employed, and how much you can spend, how much you are allowed to go over as a person before you go into minus. You should be budgeting to say, okay, from my salary of 10,000 Rand, for instance, I can afford to pay my rent, my transport, I can buy myself an item of clothing. That is what we call, in a simple sense, a budget. You're simply looking into the future, whether it's for the month or for the year, and you're saying, how much can I afford to spend based on what I earn? Now, translate that into a company. You as a company need to also do budgets. You need to be able to tell how much you're able to spend on your costs in response to your income. So if you are anticipating that you're going to invoice R1,000,000 per month, that's a lot, by the way, you can then say, I can afford to spend, say, 800 or 700 or 600,000 on my expenses, and I will still have a little bit left over for the next year. So that's what a budget in essence is. It's usually you do it in Excel, or you can do it if you're using software. Certain softwares, they can do it for you, but you're basically just simply saying, over a month, over a year, over 5 years, because budgets can be 5-year budget, they can be 3-year, they can be monthly budgets. This is how much I intend to spend, and therefore this is how much I should make if I want to cover my expenses. Now, your budget is important because okay, sorry, we just had a hiccup there. My phone fell. Your budget is important because that is the only way that you can be able to keep your costs in check. And you need to be able to compare, what did I budget for? How well did I do according to that budget? Did I go over with my expenses? Did I overdo it? Or did I make more money than I anticipated that I would make? Now, your budget needs to be kept in a safe place. It also needs to make sense. Some people, with their budgets, they are just overly enthusiastic. If you know that you can't make 2 million Rand a month, don't budget for 2 million Rand a month. You're just setting yourself up for failure. Remember, you want to be able to compare your budget with actuals. So make it realistic. Look at your actuals from the previous year. See how you did previous years and see which months you usually make money. Make your budget as real as possible, as close as possible to the real thing, and then make that your standard budget. You can then measure yourself and say, how am I doing compared to my budget? You can also look at this year's budget versus last year's budget. Are you growing? You need to be able to say, have I increased my sales by 10%, by 20%? Have my expenses increased by the same amount? So budgets are important because there's no way you can do well in the present if you haven't determined your future. You need to go into your future and be able to then work backwards. Remember, all of us are working towards a situation where we can say, well, last year, this is how much I was making. This is how well I was doing. This next year, I need to improve. If you are working for a company and you don't have budgets, how will you know how to control your costs? So you also need to have a budget from your CEO, your COO. They need to be able to tell you, this is how much you can spend on stationery this month. This is how much you can spend on capital expenditure, depending on your level. If you are maybe at a managerial level, maybe your department will have a budget and they'll say, okay, for research and development, this is how much we are willing to spend, for instance. You can then work towards that. Now you know that these are my limits. You know that you can now get good quotes and choose a quote that fits into the budget. So having said that, it's important to have your budget because it'll help you control your costs. What happens when you control your costs? You can make a profit. So it's all connected. Your budget is your starting point. Your budget is your roadmap. It's like a map. If you're traveling, say you're driving to Bloemfontein from Johannesburg, how will you know where to go? How will you know where to stop if you don't have a map? If you don't have a budget, it's the same thing. You are just running your business or running your department, for those of you who are managers, without knowing what to do, when to do, and why. So let's make sure we are getting our budgets out there. If you are a company with many departments, get the different departments to do their own budgets. They can then be reviewed and then they can be consolidated. Now you know for the whole company, this is how much our budget is. But for the different departments, this is how much our budgets are. If you've got more than one branch, do the same thing. Every branch can have its budget. Then you can consolidate the branches and have one main budget. You can then tell which branch is doing the best, which one is sticking to their budget. Those of you who are naughty and who are not keeping your costs down, we can now pick you up. What is important here is to make sure that the budget is actually laid out and given to the people that are concerned. Because if I don't know what my limits are and I don't know how much I'm allowed to spend as an employee, I will exceed budget. So as long as budgets are given on time and they make sense and they are realistic, then you can make sure that you are sticking to them. And as I said, a good budget leads to a good trading outcome and will lead to a profit. So I think today I'll end here. So we've talked about profits, how to make profit, what is a profit. We've talked about budgets, how important they are, and we've talked about salaries. And of course, all three are connected because in your budget, you need to be able to tell how much you are budgeting for salaries, whether it's management or junior level employees. They need to be in the budget as well. Make sure you include all your costs. Make sure you don't forget things like even your bank charges that you're paying at the bank. Some of you are doing high cash volumes, so therefore there will be a lot of bank charges at the bank. So having said that, I think I'll end here today. This was just a quick coaching session from myself. And I'd like to thank those of you who connected, those of you who are engaging, those of you who are liking. Please do like if you haven't liked, thumbs up, and please do share this. This will stay on so you can come back and connect anytime if you need to remember any topics. We will also be live, as I said in the beginning, every Thursday from 10 to 10:30. We'll also be live in the evening, 7 to 7:30. We are discussing the same topics. Obviously, because I'm not using a script, I may say more on the 7 p.m. that I didn't say today, but the gist is the same. The content is the same. We are going to be discussing the same content. So if you know someone who runs a business, if you know someone who is in an accounting role, or who just wants to know more about tax and accounting, please do share this link with them. Ask them to connect in real time. It's even better. We want to educate our people. I am a business coach, and I think my credentials, I've said them in the beginning. It's not important, but just know that I am qualified to give you all of this that I'm giving you. And I hope it's been useful. I hope it's been productive. I hope you'll continue to connect and you'll be part of our community. We have many other videos on YouTube on this channel. Please do go into those videos. There's actual videos, tutorials. They're very brief. They won't take up your time. There's also shorts. We're also on TikTok. So please do find us on social media and do engage. I like to hear from you. Please do connect. Tell us. I see someone is sending love from Japan. That's amazing. And I see a lot of our people that are connected are also from South Africa, which is where I am. But we are more than happy to have you from wherever you are. Please do continue to connect, and please do share this. Please do like, and please watch the rest of our videos and engage, like, comment. Would love to hear from you. Enjoy the rest of your day and your week. See you next Thursday, 10 a.m. or 7 p.m. today. Have a wonderful one. Let's log off.